Everything has been crashing in crypto this week. Let's talk about what's been happening. On July 27th, the crypto market experienced uncertainty ahead of the US Federal Reserve's interest rate announcement. Donald Trump has been publicly pressuring Fed Chair Jerome Powell for potential rate cuts, tying support to his global tariff strategies. Many traders anticipated no change to interest rates, but were split on long-term expectations for easing policies. The US administration prepared to send hundreds of tariff notifications, risking credibility if delayed. The market's narrative was shaped by both macroeconomic and geopolitical events. Bitcoin fell 4% amid the volatility, with total crypto market cap dropping around 3%. Between July 28th and July 29th, the US Federal Open Market Committee held its highly anticipated decision, maintaining interest rates as expected. The markets reacted with short-term volatility, but soon stabilized, as the lack of policy surprise reassured global investors. US equities and crypto assets saw subdued volume, reflecting a wait-and-see approach. Ongoing trade and tariff negotiations between the US and various partners remained in focus. Risk appetite faded slightly as macro uncertainty lingered. Institutional investors shifted allocations towards safer assets, as seen by modest ETF inflows and shifting volumes. The altcoin season index sat at 42, showing lingering Bitcoin dominance over altcoins for the week. On July 31st, the SEC revealed its decision on the Bitwise ETF proposal. The SEC approved the conversion of the Bitwise 10 crypto index fund into a spot ETF, but immediately issued a stay, putting the approval on hold pending further review. Market speculation ran high, but the decision did not trigger a dramatic shift in spot prices. ETF-related inflows remained robust. Ether ETFs attracted $5 billion in July alone. Only one day of outflows was noted for Ethereum ETFs during July, highlighting institutional demand. Cumulative ETF inflows for Bitcoin reached about $6 billion for the month, despite $114 million pulled in the final July session. ETFs continue to anchor price stability for major cryptocurrencies during the macro uncertainty. Industry observers saw the ETF landscape as a stabilizing force for broader digital asset markets. Developments in regulation remained a key driver for institutional activity, sustaining the growing ETF ecosystem. On the 1st of August, Trump imposed modified reciprocal tariffs on dozens of countries, altering the landscape of global trade. The announcement caused a worldwide risk-off move, hitting crypto and equities while boosting bonds and gold. Bitcoin displayed relative strength versus crypto-linked stocks, which saw steeper declines. Trump's tariffs escalation was widely seen as a macro catalyst for rising volatility, both in crypto and traditional markets. Significant uncertainty surrounded international relations and global capital flows. This resulted in capital shifting defensively, reducing risk appetites for volatile assets, including digital currencies. On the 2nd of August, US job data was released, and the numbers were weaker than expected, triggering a significant risk-off event across all markets. Bitcoin dropped nearly 3% to just over 112K, and Ethereum fell about 3.7%. Solana, XRP, and Dogecoin also saw losses, with Doge dropping 4% within hours. The market movement reflected fears about the economic cycle and the durability of the soft landing narrative. Safe havens like gold and bonds rallied, underscoring global risk aversion. Liquidity dried up as market participants reassessed exposure to risky assets. The correction extended the market's reversion from early year highs, pausing the risk rally of June and July. In the month of July, we saw a 27% increase in reported crypto hacks compared to previous months. Total stolen funds for July climbed to 142 million. The surge in attacks coincided with rising digital asset prices and heightened on-chain activity. DeFi platforms and bridges were hit the hardest, continuing a disturbing multi-year trend. Security and regulatory scrutiny ramped up in response, with major exchanges reviewing protocols. Criminal sophistication increased, as evidenced by high-value, multi-stage attacks. Regulatory bodies in the US, UK, and Asia issued new security guidelines. Risk management became a central theme in the industry as the bull run continues. Over the course of the week, the UK's Financial Conduct Authority officially lifted its ban on crypto exchange-traded notes for retail investors. The move was welcomed as a sign of maturing European crypto regulation. The rule change made it easier for UK retail investors to gain regulated exposure to digital assets. Analysts predicted a gradual increase in demand for structured crypto investment products. The FCA emphasized consumer protection and transparency requirements for issuers. Institutional players re-evaluated European access strategies in response. The decision aligned with ongoing efforts by the EU to standardize and harmonize rules across member states. The announcement was seen as a key milestone for crypto adoption and acceptance in mainstream finance. Overall, it's been a pretty brutal week in the crypto markets. The Fed kept interest rates unchanged rather than cutting them. President Trump announced new reciprocal tariffs on dozens of countries, adding to global market anxiety. And US jobs data was released, showing much weaker numbers than expected, with the unemployment rate rising to 4.2%, which signals a slowing economy. These events together triggered widespread risk aversion, leading to rapid sell-offs and profit-taking after some strong price gains earlier in July. Investors decided to lock in profits, causing further downward momentum, especially in altcoins. The crypto market as a whole lost about 7% in value in a matter of days. Top coins like Bitcoin, Ethereum, Solana, and some others dropped sharply, with Bitcoin falling to around 113k by August 2nd. Large liquidations also occurred, nearly 900 million at one point, as over-leveraged positions were wiped out by rapid price movements. August is often a challenging month for crypto, and uncertainty in regulation and seasonal market weakness only adds to the fear. Anyways, that's it from me today. If you enjoyed the video, make sure to give it a like. Let me know in the comments down below, what do you think of the news this week? If you enjoy my content, make sure to subscribe and follow the channel. I'll be uploading more soon. As always, thank you for watching and take care.